What's going on, guys? Hamilton here with the Trading Initiative with yet another trade review, this time not a trade idea. We are already in this ticker SHOP Shopify, and I just want to take the next 5 to 7 minutes to show you how we were able to position ourselves ahead of the most recent pump that you see right here. And before we get into it, if you like this type of content, please like and subscribe. It does help grow the channel, and it encourages me to continue to put out content like this. So please, if you're not already subscribed, hit the sub button. All right, so without further ado, let's get into it. Shopify. What made us want to buy Shopify at the beginning of this week? I believe we started buying it on Tuesday after almost a year-long consolidation phase here. What made us want to go and actually buy it on Tuesday instead of any other day inside of this range? So before we start with the actual breakout, I want to focus on a very key piece of the TTI trading system. That's understanding Wyckoff market models. What I want you guys to notice here is that we were in a prolonged uptrend in Shopify. Yeah, it is Shopify. Excuse me. Shopify. Prolonged uptrend off of those 2020 highs. We get the 2020 breakout, an extended run up and to the right, followed by a distribution pattern. What is a distribution pattern? It's a systemic way for institutions to offload price without crashing the price, right? So they're just selling into buying pressure over and over and over, which gives us this horizontal level that extends for an extended period of time at the top of a move, followed by a markdown period, which is obviously bears are in control. Sellers are selling the shares. They cannot get rid of them fast enough. That creates a downtrend, followed by what we just broke out of, an accumulation level. Now, this one in particular, if you watched any of the previous videos I've put out, this setup looks very similar, and that is because it works. Right now, where we're at inside of the overall market cycle, this specific setup, a prolonged markdown period followed by a horizontal level base build followed by a breakout, is everywhere. So it's up to you to go find them. In particular, why we liked Shopify, not only is it a year-long base, if you're privy to technical analysis, you know the bigger the base, the bigger the breakout. The reason why we like Shopify, though, is because if we look at the sector and the industry here, you know that we are huge in TTI on sector and industry strength. The sector here is going to be your, XLK, which is your tech sector. And then right here, your software is your IGV. And if you actually go and pull up those two charts, I won't waste your time right now. Both of these are, what are you expecting them to be doing? They're both moving up and to the right. And that's what we want to see. We want to see sector strength. We want to see industry strength. And Shopify has both of those right now. So as we were coming into the breakout, the RSI is above the 50. This is, by all accounts, a bullish momentum regime. We broke above the 50 at the beginning of the year here in January 3rd-ish of 2023. We came down, tested the 50, oscillated off of it, and bounced. And we are now looking to range in between the 50 and the 100 for as long as we can. This is what validates our bullish momentum idea in terms of the RSI. We want to be long as the RSI is bouncing at the lowest 50 and all the way up to 100. We don't care how high it actually goes, although RSI is a banded oscillator that doesn't go above 100. So above 50, below 100, that is bull territory for us. We understand that this $44 level has held as resistance for almost an entire year. So obviously, anytime we're up there testing it, we want to know, what is it going to do? Is this finally the time it's going to break? The 200-day moving average, which has been pivotal for us over the last few weeks, we only want to be long names that are above the 200-day moving average. More of the stock market is above the 200-day moving average than not. Something like 65% of the stocks right now in the market are above the 200. Why would you want to go and buy something that is not above the 200 when 65% of the stocks in the NYSE right now are, right? It doesn't make any sense. So Shopify is above the 200. MA has a massive 6.02 ADR, which leaves you open to shares or contracts, depending on what you want. And then obviously, once we break 44, there is no volume. The VRVP says there is nothing here that we realistically have to worry about. This is a B plus setup. The only reason why it wasn't an A setup was because we would have preferred at the time of us taking it on Tuesday, the 200-day moving average either already flat and potentially curling up, or at the very minimum not going down anymore. And unfortunately, when we were entering Shopify, the 200 was still sloping down slightly, and so we did not go above our normal 1R positioning. This was a normal 1R position, but it was a relatively comfortable and confident play at around a B plus grading here. So how did we actually get into it? Well, like we get into most things, we waited for the pullback. Shopify broke above on Tuesday, January 24th, up and over 44, and then pulled back. What does that mean? that means that we are looking to enter there. That's it. This is the BRB setup that you hear me all talk about. I'm not going to go in this video why this matters. Just know that we grabbed contracts way cheaper than the guys that chased it up here, or even bought it at market open. We were able to grab near the lows of the day on Tuesday, Shopify, and that allowed us to get incredibly efficient fills. Okay, that maximizes our reward, minimizes our risk, because if we get stopped out somewhere where our original stop out level is right here, would you rather be stopped while buying the contracts here, or would you rather be stopped while chasing price up here? Obviously, the loss is going to be way smaller if you're able to buy the pullback from the beginning, right? So as you can see, the stop here is somewhere around 39.60, an entry of 44. And our overall price target is 56.82. But for options traders, that leaves you kind of in limbo. You have to choose $55 contracts or $60 contracts. So we attack this a few different ways. Most of the guys prefer call debit spreads in this type of environment right now where IV is a little bit higher. And so they just bought the 55-60 call debit spreads. They were greater than 4-1. At the time, we were getting them for like a 4.5 or 5-1, which is friggin' insane. So we said, yeah, on this pullback, let's load these things up. So we went and bought varying expirations depending on how big your account was. The later dates are going to be a little bit more expensive, but obviously a little bit more foolproof, because you're not going to have to worry about some huge negative premium hits on slight pullbacks or consolidation. So it was up to the guys inside the group on what they wanted to play, but it was generally the 55-60 call debit spreads, or simply the 55 or $60 calls. It was really up to you, your account size, and what your risk preferences are inside of TTI. But this is the play. And as you can see, look on the screen right now, bam, we are up triple digits in Shopify in just 3 sessions. We are expecting this thing to continue to run at least another $5, potentially $10. And if that does happen and we're caught in a spread, guess what we get to do? We just roll it out. That's the beauty of swing trading. We hit our price target, we hit our maximum amount of profit, specifically when it comes to these spreads. We just roll the trade out and continue the trend to the upside. This was, I don't want to say easy, but a relatively carefree trade, if you will. We entered on the pullback, and there really hasn't been any resistance since the Tuesday pullback that we've had to worry about. This has been a pretty easy-go-lucky trade. We're up triple digits. For the guys inside of the group, you know that means sell half of your position at around 100% to make the trade free. There's no way you can lose any money on this. And let's continue this rocket ship up to 55-60 and maybe beyond. So guys, if this stuff makes sense to you, if you work a 9-to-5, you can't find time to day trade, or you just simply don't like day trading, this is all we do. We focus on swing trading utilizing the TTI trading system. We take trades anywhere from days, weeks, and sometimes months. The Shopify trade is a good example. Some guys grabbed months worth of expiration on this, and this thing can just run forever. So if that matters to you, having time back in your life or not having to spend so much time behind your chart, highly suggest checking us out. Link is in the description. You can read through everything that we're about, everything that you get, including a free technical analysis crash course when you join. If you're newer, it's 19 hours of content that I guarantee will help set you up to learn the TTI trading system. Like and subscribe, comment below if there's anything you want to see. I'll catch you in the next video.